Well, the future of fintech in Nigeria is perceived as one that would attract the attention of millennials in the financial market under a better coordinated environment. While regulations are still in the works for this purpose, a few tech firms have been modeling safe investment environment, especially in the area of crowdfunding within the agriculture space. My colleague Temple Ashaju had a chat on this trend with the chief executive of Requid Technology, Felix Emafidon, who won the Stock Exchange's 2019 hackathon and is a member of the SEX FinTech Roadmap Committee.
In terms of our investments, interest, right? As at today, we have just a little less than 2,000 users that are using the platform, investing on the platform, benefiting from the fact that they have access to a secondary market for agro investments, all right? So, which is pretty much what we do. So our value is actually anchored on the fact that we aggregate agro investments on a single platform, all right? Then providing a secondary market for that market, for those products, which is currently unavailable. So what that means is if you invest with us today, say in a Tribe Agri product or an agro partnerships product, you can pretty much liquidate that investment before the maturity date, which is currently on. We think of us as a middleman, right, in quotes, right? We do our due diligence on the partners. So, like I said, the likes of Tribe Agri partnership and all of that. Our job, which is the core of our business, is we profile them. We have a framework with which we carry out risk assessments on them. And based on a benchmark that we have set relative to the product in question, we then determine if it's safe, right, for our investors to participate. Right? So that's one side of the divide. And on the other side is the individual investors, institutional investors, as the case may be, that are interested in accessing the investment products by his partners. So we are the guy in between that ensures that both parties are getting value. So technically what we do is we connect investors' funds to opportunities that are out there that need those funds for business.
I'm just wondering, we do not have crowdfunding sort of regulation or guidelines in Nigeria. So what kind of guidelines are you operating with?
Yeah, to some extent, yes, right? Okay, so I'm a member of the SEX FinTech Roadmap Committee, and now the Implementation Committee. So I pretty much have an idea, to some extent, what is happening around the regulation for crowdfunding. The hope is that in the coming month, the SEC should have released a draft to the public, right? But what we are doing right now is we're operating a trustee model. All right, so we have a trustee, a SEC licensed trustee, that pretty much oversees our operations in terms of the funds coming in from our investors. Those funds go directly to our trustees. We don't, as a technology company, we don't touch those funds, right? And then based on instructions of the investors, I want to invest in X, I want to invest in Y, the trustee pretty much just manages all of those transactions and even our financial relationships with our partners as well.
So what's return on investments like for an average investor?
So this is what I'll say. Generally, for the rules of investment, right, the higher the returns, the higher the risk. But one of the things that we do, which is part of our risk assessment framework, is we check benchmarks. So if I were the one, farming rice today, right, and I had these same funds, can I do all the things that this person will be doing in terms of operations, hiring of people, and whatever else that I need to do to farm that rice for the same period of time? Is it possible to get that much return? So if a farm is promising me, I'll give you 20% in 9 months. So the question I ask myself is, if we were to still do the same business, right, how much can we get out of that? And then I try to then factor their cost of doing business. So the cost of fund is already 20% in 9 months, right? What's the cost of doing business? So I hire 10 people full-time. Then I have access to farmers. There's the cost of operations. There's the cost of marketing. There's cost of virtually everything. If I do all that, what does that also come to in percentage? So maybe that comes to another, say, 9-10%. So that's 30% already. There's cost of insurance if you're insuring your farm as well. And a number of other costs here and there. By the time you do that, what is the standard yield for rice? So if I plant rice, I buy all the inputs, do all the things I need to do, what's the standard? They usually benchmarks, across countries and all that. There's a global benchmark. Then countries usually also have their own yield index. What is that value? Of course, depending on demand of some of these products and at the time of the year when the produce is ready, the price could vary against that benchmark. So it could be higher. In some cases, you could have something lower, right? So if you do that, if you compare these values, what exactly is the profit for the agribusiness? Does that make sense? Right? So that's one of the things that we do. To answer your question, for the bulk of the partners that we work with, the numbers that they're giving, the ROI, the returns that they are giving, are pretty much commensurate with the kind of product, the produce that you're farming.
Which is what?
So for example, for poultry, in some cases for poultry, you could be doing so poultry takes about 2 months to breed, right? In that 2 months, if you keep your costs pretty much around standard cost, your returns should be somewhere around 40-something%. All right? Some of these guys promise 15% in that same time. Of course, what they also do is to try to be careful. Yeah. If it's going to take us 2 months to, have these birds, grow these birds, and do all these things, also have an off-taker to come and take them after processing. How long will it take us? 2 months, maybe in a couple of weeks, right? What they then do is to then say, okay, to put in a bit of leeway, let's do a 4-month investment. Why? Because, so let's see one of the things that could go wrong. So you insure your inputs usually with an insurance company. Then let's say 1 month and a half down the line, something happens, there was fire, and then you lose all your birds. Usually what the insurance company will do is to bring you back to the point where, to business, to the point where you were. So they give you back the number of birds that you have, and then you start the process again. All the input that you need, they also provide as well. So it takes you 2 months, right? So that already is about 3.5 months. So so all of that is priced into the returns and then the period. Most of them also try to be a bit more. We have a partner right now, even though it takes about 2 months or so to breed the birds. The investment will still be structured for something as high as 5 months, 6, to also provide for cater for those kind of risks as well.
Now, what's your judgment on the rates for crowdfunding as it obtains out there?
Okay, to be honest, actually, a lot of them, their rates are already dropping. So what I think happens a lot of the times is when they're starting to also get a chunk of the market, they try to reduce what they get out of their the total yield they're getting, so that they can use that to acquire the customers, and eventually they start dropping the rates. That's pretty much what's been happening. I think for ROI is great, more than 40-50% per annum. You need to ask yourself questions. Where exactly is this money coming from? And there are lots of them like that. I've seen some that will tell you, give us 100,000 in 6 months, we'll give you 50,000. How is that possible? Yeah, so usually it just depends on what the farm is, all right? For crops, for things like rice, sorghum, and all that, the yields are a lot less. Yes, it yields are a lot less than things like beef, that's cow rearing, poultry, and the likes. Yeah, so it's usually also farm dependent, whatever it is that you are farming during the period.
I strongly want to believe that you are confronted by some challenges. Can you tell us about that?
Okay, challenges. Maybe one of them is the fact that the market is currently saturated with a lot of these agri-businesses, right? So since the first, the pioneers, the likes of Farm Crowdy, started this whole sponsor a farm, you get some returns. A lot of people who shouldn't even be in the business, right, are thinking that, oh, maybe this is an opportunity. It's a common Nigerian thing. You see a business succeeding in this model, and you just want to copy the same thing, and drive it. As at today, we've profiled just a little less than 60 of these businesses, right? We have almost 20 of that in a blacklist. And that's because some of these guys have collected funds from the public before and never give them returns. Why? Because it's either because from the very onset, that was the plan, right? In some cases, they had some intention, to give returns, but because of maybe lack of experience, inability for them to manage, carry out the process as they should, they were unable to, keep their promise to their investors. So we have a handful of that, and that's for me is like the hugest challenge. It took us a bit of time to design the risk assessment framework that we're using right now, because if I wanted to invest in stocks today, what do? Public data. All the fundamentals, all the information I need about a bank's stock, right? They're all available publicly. Their financials, bank, everything you need, right? But to profile an agri business with a private company is a bit, it takes a bit of work to even get access to some data. How do you determine if they are even liquid as a company, right? How do you determine if this is not just some Ponzi kind of structure? You collect from Mr. A, and then when Mr. B is coming, you give Mr. B, Mr. A's money, and structures of that nature. So that for us at the very onset was like the hugest challenge that we had. We don't have access to their direct books, right? And at the onset, a lot of them were being reluctant to even share some of their audited financial statements with us, right? Until we came to some level of strength where we could ask for those, for some of those information. So maybe that's for us, like at some point, still is though, like the biggest challenge that we had. The market's saturated with a lot of scams out there. How do we very accurately, scientifically determine the institution or the partner that is credible enough for us to give our funds?
When crowdfunding regulation comes into play from the Securities and Exchange Commission, what do you think will change in the system?
So I've spoken with a handful of the guys who are doing crowdfunding today. And what they tell you is that I don't want to be regulated, right? I just want to do my business, right? I'm farming, right? I just want to do my farming business because that's the core of my business. What I do is I provide farmers with credit, right? So what I think might happen is when the regulation comes out, we don't know how stringent the regulation is going to be, what the cost of license would also be. One of the things that might happen is, for us, which is one of the ways we're positioning ourselves already, saying is what we are doing, our goal is to connect investors with opportunities, right? What might happen is these guys may just kind of double back on what they're doing and try to review their model, right? And allow a platform like ours to be the guys who are regulated by SEC. And then it just be a simple conversation. They need funds. We crowdfund on their behalf. They do their business. Everybody's happy. So yes, in terms of when the regulation comes out, what will happen, I'm not so sure. But I see, depending on the terms of the regulation, what exactly the regulation says, some of these guys may look at their model again and maybe tweak that a bit. It will also help the industry because what that would mean is that the bulk of the scams will have to be filtered out because they definitely cannot meet whatever the requirements will be by the regulator.
So what's your medium to long-term plan at Requid? Are you looking to be a springboard for the listing of startups on the Nigerian Stock Exchange eventually?
Absolutely. It's actually one of the things that we're working on at the moment. Okay, just to pull that too, we're currently a strategic partner to the NSC on their growth board. So the growth board is designed to drive access to funds for high-growing, fast-growing, especially fintech companies.
And to the markets. Now, Nigerian stocks closed lower, wiping off the previous day's gains as investors took profits across bellwether stocks. Let's bring in Eddie Dionyewan to give us some details. Hello, Eddie. A lot of profit taking on MTN and Dangote Cement. What happened?
Good morning, Timmy. Well, just like in midweek trading where MTN Nigeria and the banking sector drove gains, investors decided to take advantage of that and take profit. Now, because of that, the market failed to sustain previous gains, ending Thursday's session down by 2.94%. And you can't blame investors for the way they're reacting. You know, we've gone from 3 confirmed coronavirus cases to 12, and oil prices are seesawing around the $20 per barrel level. So investors are selling off. Overall, Volume, value, and deals traded were lower compared to Wednesday's session, as 525.84 million shares worth 4.74 billion naira were exchanged in over 5,400 transactions. Now, market breadth was negative yesterday, as there were 22 losers against 13 gainers. Shares of Zenith Bank were the most traded for the day in terms of volume, while GT Bank was the highest in terms of value. Now, there were losses across banking stocks yesterday, and that dragged the index down by 7.75%. Now, Zenith Bank shed 10% yesterday, UBA lost 6.5%, and Access was down 5.7%. Basically, Chimize, the banking sector took the heaviest hit yesterday. Consumer goods was also down 0.96%, and that was due to losses from Nestle, but however, international breweries and Dangote Sugar made some gains yesterday. Now, the losses from Dangote Cement and Lafarge Africa dragged the industrial goods sector down by 1.45% yesterday, and that was what dragged the market down yesterday. Now, the insurance sector was also a gainer for the day, thanks to increases in share price of Cornerstone Insurance, Law Union, and AXA Mansard, while the oil and gas sector remained unchanged. Now, Chimi, yesterday, the NSE released a circular advising all listed companies that plan to hold their annual general meetings to put in place adequate precautionary measures to ensure the safety of all stakeholders at the meetings. Now, the stock exchange says it will engage other regulatory authorities in order to provide further guidance to how listed companies, can take steps to deal with the virus. Now, outside of Nigeria, the New York Stock Exchange is temporarily closing down floors and is moving to fully electronic trading next week to prevent the spread of the coronavirus. The Philippine Stock Exchange has also closed due to the coronavirus as well. So we'll keep an eye out to see if more stock exchanges will follow suit. But moving to the unlisted securities markets now. The NASE OTC market closed Thursday positive as the NASE Unlisted Security Index and market cap appreciated by 0.97%, to 689.69 points and 506.67 billion naira respectively. The total number of equities traded was 20,300, valued at 7.15 million naira in 4 deals. Now, moving to the fixed income market, the activity in the bond market was relatively mixed, with pockets of demand seen across board at the beginning of the session. However, towards the end of the session yesterday, Chimi, we saw slight profit-taking activity, witnessed across board. In all, yields rose by 7 basis points on average across the curve. Market participants are likely to trade on a cautious note today, but with a bullish tilt due to improved system liquidity. There was about 34 deals worth 13.86 billion naira. Now, activity in the Treasury bills markets was relatively quiet, albeit with a bullish tilt on the back of unmet bids at the primary market auction on Wednesday. Now, demand was seen across board, but with minimal volume traded as market supply in that segment of the market remains limited. Yields declined at the mid and long end of the curve, but the quiet trend is expected to continue in today's session. We saw only 9 deals yesterday worth 503.99 million naira. Now, the OMO market was bullish yesterday as yields declined by 7 basis points to 16.6%. We see that, unlike before, that would always have a lot of deals on that segment of the market. We had just 51 deals yesterday worth 170.47 billion naira, Chimi.
All right, Edidion, from all you have said, what does the outlook, what does it look like next week?
Well, Chimi, if things keep going the way they're going, we expect to continue seeing, a bearish market. Now, what's just been happening, some days we see gains, some days we see losses. What's just happening is investors are, buying shares and then just waiting for, the prices to go up so they can sell. So we're going to continue seeing, a lot of that in the market unless there is some positive news. And we don't know what that will be now, unless someone comes out to say, there's a cure for the coronavirus and all prices have gone up. We're most likely going to continue having a bearish market, Chimi.
We actually look forward to that. I just hope someone will just come up with that. Thank you very much, Eddie.
All right, Chimi.